Ladies and gentlemen, good day and welcome to the Q4 and FY'24 earnings conference call of Rupa and Company Limited, hosted by Orient Capital. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Khaitan from Orient Capital. Thank you, and over to you, Mr. Sumit.
Good evening, everyone. Thank you for joining us on the call today. We are joined by the management of Rupa and Company Limited, represented by Mr. Vikash Agarwal, Whole-Time Director, and Mr. Sumit Khowala, CFO. They will take you to the results and the business performance, post which we'll open the forum for Q&A session. With this, now I hand over the call to the management for their opening remarks. Over to you, sir.
Thank you, Sumit. And good evening, ladies and gentlemen. On behalf of Rupa and Company Limited, I would like to extend a very warm welcome to all of you who have joined us for this results Concall. We appreciate your time and interest in our company's performance. I hope that everybody had an opportunity to go through the financial results and investor presentation which have been uploaded on Stock Exchange. We are pleased to present an insightful overview of our company's performance during financial year 2024. At the outset, we acknowledge that our performance did not meet the expectations set at the beginning of the year. This was largely due to challenges in maintaining prices within the business landscape. Notably, we achieved a healthy 17% annual growth in volume, driven by a 16% growth in economy segment, 17% in mid-premium segment, and 25% growth in premium segment. However, in value terms, our revenue grew by approximately 6.4% year-over-year. The premium segment showed superior value growth of 20%, while economy and mid-premium segments each grew by 7%. Despite our efforts, initiatives to boost revenue from export, thermal wear, and women's segment did not materialize this year. But looking ahead, we are optimistic about refining our business strategies to achieve a rebound. Modern trade continues to perform well, contributing 4% to our overall revenue in financial year 2024. Our proactive marketing efforts, including collaborations with renowned celebrities, have efficiently enhanced our brand visibility. This is reflected in the increased sales volume across our segments in financial year 24. We invested approximately 66 crores in the branding and advertising, which constitutes over about 5% of our revenues in financial year 24. We also launched a new pilot project for our retailers under the Pragati scheme, a loyalty program which standout features like lifetime validity of reward points, which will help us to map secondary better as well. Currently implemented in 2 states, we'll monitor its progress before expanding to more states. In a recent development, we launched a new range in the premium segment, the Signature Collection, in collaboration with renowned fashion designer Rohit Bal under Macroman M series. We also expanded the portfolio of the Colors brand, which has gained significant market traction since its launch. Further launches are anticipated in the near future. Additionally, the management has decided to discontinue the licensed brands of FOTL and FCUK, which did not deliver the desired results post-COVID disruption. Though we note that in financial year 24, we did not meet the expectations set, but your confidence in us and conducive market opportunities would continue to boost and inspire us to do better and enhance shareholders' value. In fact, we take that as one of our prime responsibilities. We anticipate our revenue growth to be in the range of 13 to 15% in financial year 25, primarily driven by volume with an EBITDA margin in the range of 10 to 11%. For quarter 1 financial year 25, we expect our revenue to grow in the range of 18 to 20% year on year. I'm also happy to share that Rupa brand has been recognized as a well-known trademark brand by Trademark Bureau. This only shows how strong the brand is and how it is well recognized by the consumers, and I'm sure it will help us to reap more and more benefits in the coming future. With this, I would now conclude my speech and would like to hand over the floor to our CFO, Mr. Sumit Kowara, to brief you our account financial performance. Over to you, Sumit.
Thank you, sir. Hello, everyone, and thank you for joining us for our Quarter 4 and FY'24 earnings call. I will provide a brief overview of our financial performance for the Quarter 4 and FY'24. On quarterly performance, revenue from operations for Quarter 4 FY'24 is 400 crores, degrew by 1.6% year on year. The EBITDA for the quarter stood at 40 crores as compared to 27 crores same period last year, registering a growth of 48% year on year. EBITDA margin for the quarter stood at 10.1%, up by 340 basis points year on year. The net profit for the quarter stood at 24 crores against 19 crores in Quarter 4 FY'23, which grew by 29% year on year. PAT margins for the quarter stood at 6.1%, up by 150 basis points year on year. On yearly performance, our revenue from operations for FY'24 stood at 1217 crores against 1143 crores in FY'23, up by 6.4% year on year. EBITDA stood at 117 crores, grew by 32% year on year, and EBITDA margins for FY'24 stood at 9.6%, up by 180 basis points year on year. Profit after tax stood at 70 crores as against 54 crores same period last year, registering a growth of 30% year on year. PAT margin stood at 5.7%, up by 100 basis points year on year. Cash generated from the operation stands at 156 crores positive, which is mainly utilized in reducing our net debt. Our net debt has reduced significantly as on March 24 and stands at 6 crores versus 134 crores last year. There is an exceptional item in the profit and loss account for INR 3.82 crores, which is an write-off for unamortized balance of business rights for our licensed brand FC UK, which we are not going to continue in near future. With this, I conclude my submission and open the floor for question answer session. Thank you, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sahil Bora from MNS Association. Please go ahead.
Hi, good afternoon. Am I audible?
Yes.
Yes, sir.
Yeah. So, I wanted to know how is the progress on opening new stores in places like airports and train stations, and how do we think they will help our sales?
Well, opening stores in airport and railways is a great idea. In fact, we are trying, but airports rentals are quite high. But we are talking to railways to have space there. At the same time, we are having 29 EBOs now, and we are planning to open another 20 EBOs this year. But that's a great idea, and we make a note of it. We are trying, and railway is definitely on our focus area.
Thank you. My next question was, can you give us an idea of how many new stores we plan to open in malls, like our own outlets, warehouses for next year?
Around 20 EBOs.
20.
Which will be a mix of high street and malls.
Okay. Lastly, our working capital has increased from last quarter. As of December, it was around 736 crores. and now it is substantially higher at 762 crores. Can you specify some of the reasons for this substantial increase?
If you see working capital days in terms of days, it's almost same. The working capital increase is in proportion and in line with the turnover increased.
Okay, that helps. Thank you so much.
Thank you.
Thank you. The next question is from the line of Mamta Agarwal from Singhania Association. Please go ahead.
Hello.
Yeah, hi.
Congratulations for the good set of numbers. So my first question is, how are our subsidiary companies like Rupa and Rupa in this quarter?
Pardon, sir? Didn't get you.
Your voice is breaking down.
Your voice is not audible.
Hello. Am I audible now?
Yes, ma'am.
So my question is, how are our subsidiary companies like Rupa Bangladesh and Rupa Fashion performing this quarter?
Ma'am, for both these subsidiaries, operations has not yet started, and means the performance is basically we have very negligible negative EBITDA for these two subsidiaries.
Okay. So my second question is, can you provide us with the revenue contribution across our segments for the quarter as well as for FY'24?
Okay. The revenue contribution from economy segment for quarter 4 FY'24 for economy segment is around 45%, and mid premium is around 50%, and premium for 5%. And for FY'24, economy segment is 47%, mid premium is 50%, and premium is 3%.
Okay. Thank you, sir.
Thank you. The next question is from the line of Sunidhi Joshi from an individual investor. Please go ahead.
Hello, am I audible?
Yes, ma'am.
Yeah, congratulations on the results, sir. Can you help us understand the current status and impact of the big stores and exclusive brand outlets that we have opened?
We are still not very high on EBOs in terms of numbers, it's just 29. So once we reach a landmark of say 50-60 EBOs, that will be a good set of numbers to actually make a difference to our numbers and all. We are still in that process of learning and opening EBOs and make it a viable model.
Okay. And what was our total capex in FY'24 and our capex plans for FY'25?
The total capex for FY'24 is around 7 to 8 crores, and we don't have any capacity expansion plans for FY'25, so there will be a routine capex of 12 to 15 crores.
Okay. Thank you, sir.
Thank you. The next question is from the line of Reshma Mehta from Green Edge Wealth. Please go ahead.
Yeah, thanks. This is Resha. So, the first question is, can you talk about what is the channel inventory in the system like? Now it is how many days? Has it gone back to the old days of 30 days with dealers, or is it still in that range of 10 to 15 days?
Our understanding is inventory level is still low with the dealers and all. It's still not very high.
Okay, so how far away would it be from the old inventory levels in the system?
I think once the yarn prices are it's not falling anymore, it's stable. Once the yarn prices are firm, and I think dealers will start building more inventories in coming time. But that will only depend upon the raw material prices. Once it's firm, then dealers are a little more confident of building the stock.
So you are attributing the low channel inventory purely to the raw material or even the subdued demand scenario that we are witnessing?
The subdued demand still that whatever demand is there, they maintain an inventory level of a month. That is a standard stock they maintain. But it is more due to subdued raw material prices. And
Okay. Okay. And in the last financial year, FY'24, we've grown at 6% versus, one of our peers, Dollar, they have grown at almost double the rate, around 11-12%. So clearly, we seem to be losing some market share here. So what steps have we taken, to kind of revive this growth? And if you could just elaborate on what strategic steps are we taking.
Have grown negative also on an annual basis, so we won't be able to comment on what competition has done. But initially, as commented, we are not happy, not satisfied with our performance. We feel we could have done better, but we have taken a lot of initiatives in last year. I am sure that did work well last year, but in coming quarters, it should we should be able to do better well.
Yes, so my question is, what are those steps and what kind of results are we expecting from those steps?
As I told you, we expect around 15% growth for the coming financial year with a 10 to 11% EBITDA margin. And coming first quarter, we are looking for a growth of 18 to 20%. And in terms of steps, there are like innumerable number of steps in terms of building the team, in terms of endorsing a celebrity for our economy range, in terms of launching a new brand, which is signature collection with first time in India, it's been done with Rohit Bal, which is a very popular designer. So innumerable, we are building a very strong IT team. We have in fact hired a new EBO manager, in process of hiring a new senior export manager to focus on the export area. So a lot of initiatives, it's a continuous process now.
So do you yourself, as per your internal assessment, see that, you're losing market share?
Yeah, last year, you can say we have probably lost a bit of market share. But we are talking about only one competition, which you named. There are other competitions as well. But yes, I think one of the competition has degrown to a certain percentage on overall year-to-year basis. So just a year, probably yes, but I think coming year it will be more clear.
And in terms of, some strategic initiatives, the presentation mentions rapid expansion in high potential areas and one more being reorganizing the distribution channel. So can you please elaborate on these two strategic initiatives?
Ma'am, the expected areas have performed well with good volume numbers. We have built up a strong team there, and there is a continuous focus there to gain the market shares. And regarding the reorganization of distribution channel, we have launched a Pragati scheme for our retailers, and which would provide us a better distribution management system, which will distribute a reward point to our retailers, and which will be redeemable in kind, and that reward point is valid for a lifetime.
Basically help us to map a secondary sales better, which is majorly primary now. So it will help us to do a secondary mapping also, which will help us in long run.
So with this,
sorry to interrupt, Ms. Resha. I request you to rejoin the queue for your follow-up questions. Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, good evening, sir. Thank you so much for taking my question. So just wanted to get an idea of how do you see the demand scenario in the industry-wide being right now? Is it, are we at the new uptrend of a new cycle, or what do you see the, demand scenario as currently, sir?
Demand scenario, seeing India's population and the opportunity we see a huge opportunity there. But at the same time, industry is getting competitive. So, but there are various avenues in terms of export, in terms of modern trade, in terms of women's wear, in terms of thermal wear. So definitely opportunities are also there. So it's identifying the right opportunity and work on same is what we are doing.
Fair enough, sir. Also, sir, just wanted to ask, any chance of a price hike in this year? Do we see it as if it's possible, or how is that? Do we have, or is there pressure?
That's on our wish list. We will be trying to do around 3 to 5% of price hike, but it will all depend upon the raw material prices to a great extent.
Okay, sir. And just wanted to know, sir, we are guiding for a 15% growth, but is there like some risk that this cannot be achieved, or what is it dependent upon, our growth? If we can put it that way, like which sector has to fire so that we'll be able to achieve this growth, sir?
There are a lot of factors, like in terms of export is there, which is not very big for us. Women's wear, which is not again very big for us. Athleisure hasn't done in last 2 years, hasn't done well. So that are the two segments. Winter wear, still numbers are very less compared to what we did a couple of years back. So winter, if it does well, winter wear should do well. In the economy segment, we have invested heavily in last 1 year with endorsement with Ranveer Kapoor and all. That should do well. Modern trade should do well. In fact, with signature collection with Rohit Wal, what we have introduced, that should help us. So there are various things what we are doing. Opportunities are everywhere. We are working on all of them, building up a strong team, and we are hopeful we should be able to do better this year. And the launch of new retail Pragati scheme, loyalty scheme, that will actually help us to map a better secondary map retailers also, where we are doing primary, but where secondary is happening, that mapping will also be done. So that's another initiative what we have started. So how better we can will all depend on.
Fair enough, sir. And so just my last question. When can we get back to the trajectory of 14 or 15% EBITDA? This year we are guiding around 10-11%. So, when can we, what pathway do we see, that we can return to our maybe historical margins?
I think right now the challenge, once we do a fair top line of around 15% and above this year, in coming year or two, once you have a fair top line, those numbers are quite achievable as well.
Okay. Fair enough, sir. That's it from my side. Thank you, sir.
And also the lot will depend on raw material prices. The last 2 years, raw material prices has been taken a huge hit. So that was the main reason, which is very unique and which is not normal to any business standard procedure. So that we are getting out of it. So probably this is the last year of the pain period, and I think coming year should definitely do better.
Okay, sir. Thank you so much, sir. All the best.
Thank you. The next question is from the line of Rehan from Equity Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. My question is on the gross margin. We've seen raw material price be fairly stable over last year, but your gross margins haven't supposedly improved drastically in terms of the overall market kind of situation. So can you throw some light on why are we struggling on that?
The ASP has not been increased, so the net realizable is less. So we have maintained the gross margin that we have maintained in the last quarter for the December quarter, and the gross margin for the fourth quarter is remain same. Going forward, if there is a price hike, we'll definitely improve on gross margins.
No, is the product mix changing? That's mainly my question, because we're not like the contribution seems to be same versus YY. So are we selling more on the economy segment, or I'm just trying to understand that, because the gross margin is purely flattish versus industry standard.
Yeah, as of now the product mix haven't changed, but we have taken a lot of initiatives to launch the premium segment and like colors in the mid-premium segment. And once the sale of women's wear, ladies wear and thermal wear picks up, those numbers will change. The gross margin will definitely change.
Okay. So basically, is the company focusing more on premium or mass market? Where are you trying to find your strength and capitalize on?
Everywhere. We find enough opportunity in all the segments, and our focus is everywhere. We have equal focus on economy, we have equal focus on premium also. And other segments what are not very huge, big for us, but the opportunity is great, like as I mentioned again, like women's wear, athleisure, thermal wear. Those are high gross margin businesses, where of course the focus is also there as well.
Okay.
Including export.
In your segmental volume growth, could you repeat the volume growth for year-on-year segmentally, like economy, mid-premium, and premium, for year and quarter?
Yeah. The volume growth for means economy segment for FY'24 is 7.7%, and for mid premium it's 8.6%, and for premium segment is around 25%.
This is volume, right?
Yeah. Just a second. Economy segment there is 16%, mid premium 17%, and premium is 25%.
But these are all volume numbers, that's correct?
Yeah, volume.
Volume.
And your for the quarter is 27 and 7, is that correct?
Yeah.
Okay. And lastly, what kind of contribution have we seen from the women's wear this segment? This quarter.
Contribution from women segment for FY'24 is around 10%.
Okay, that's good. Yeah. And can you tell what was the ASPs like for the year, for the entire year?
Pardon?
What were the ASPs like for FY'24?
70 to 70, ranges between 70 to 75 rupees.
Okay. Thank you so much.
Thank you. The next question is from the line of Aniket Kulkarni from BMSPL Capital. Please go ahead.
Yeah, good afternoon and thank you for the opportunity. So, I just wanted to understand what basically drives the demand in this industry. So, as you said, the raw material prices are at multi-year lows. So, the product prices too should be at lower prices, right? So, if that is the case, then why is the demand side not yet picking up? Or, I mean, I just wanted to understand what are the factors which drive demand. Is it better consumption, better economic performance on the rural side, or, I mean, what exactly drives demand here? Because if the prices are low, then demand shouldn't be a problem, right?
It's not about the price. Like, as we have said, we have grown 17% in terms of volume. But yes, demand definitely depends a lot upon the prices also. But rural demand has been a little soft for us. So if we see rural demand is little, last quarter we are little soft. In coming quarters should do well, which will definitely help us in better numbers as well. But our understanding was a weak rural demand in last few quarters.
Okay, understood. Thank you so much.
Inflation probably it's beyond our understanding. We assume it is largely because of inflation.
Okay. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Junaid from Counter Cyclical PMS. Please go ahead.
Sir, you have been mentioning about the Pragati scheme, so can you just throw some more light on what that actually is and how will it impact the company going forward?
So it's basically a retail loyalty scheme. So long historically we are doing more of primary selling to our distributors and wholesalers. Now this is further mapping, and once we do primary and the dealers bill it to our retailers, that is secondary what we call. So that is actually a secondary mapping what we are doing. And anybody who is billing through DMS, through the system, will get the reward points. So those reward points are for lifelong, where retailers, it's basically a loyalty program for retailers. More he buys, more incentive he gets. And more wider range he buys, more incentive he gets. It's basically to incentivize retailers who are associated with us.
Alright, sir. So this is just to improve the stickiness of the retailer with us.
Absolutely. Yeah. And to inspire him to sell a wider range and to do a regular business.
Alright, so when was this launched and have you seen any impact of this?
Yes. Few stations we have launched, those stations it has done well. So now we are increasing it to 2 states. We have started the process. It takes a little time to stabilize a city or a state. So it's a little lengthy process, but we are hopeful in a quarter or two we'll be able to get a better traction from that.
All right, sir, got it. Sir, can you also share the price trend of raw materials for FY'24 and how are they faring right now?
It's stable now, and coming quarters we see it should stay stable until unless export demand is not very huge, which we don't see. Export demand is better from previously, but coming quarters it should not be weak, it should be firm.
Sir, can you quantify the number?
In terms of yarn prices?
The raw material prices, yeah. Yarn prices.
Primarily, say yarn prices are around 285 to 90, 285 to 290 for a 40s count. So that should stay around these levels is our assumption.
All right, sir. And how were these in Q4 FY'23?
23 it was 350.
All right, sir, got it. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Anushka Chitnis from Arihant Capital. Please go ahead.
Thank you so much for the opportunity. I just wanted to ask if the management has any capital allocation policy for the years to come, if there is any major capex planned, if you can just talk about that a little.
Okay. There is no expansion plan for FY'25, so there will be routine capex of 12 to 15 crores. Yeah, we are operating at around 70 to 75% of our actual world capacity. So whenever we would require the increase in capacity, we can invest. We have cash in our books, and we can expand easily.
And at the same time, we are looking for some inorganic opportunities always on the cards.
All right. Thank you.
Thank you.
Thank you. The next question is from the line of Manish Shah, an individual investor. Please go ahead.
Thank you for the opportunity, sir. So in this quarter, our margins have gone up. What is the primary reason for that, sir? Hello?
Yes.
Yes. Sir,
the gross margins compared to last year Q4 has been increased, and the reason for the same is basically the change in mix as well as calibration of prices.
So, sir, is this thing sustainable in the following quarters also?
Yes. Going forward, if the price remains same, we will maintain the same level of gross margin. If the raw material price get rises, if market supports, we will take a price hike and improve our gross margin.
Sir, in this quarter, our high margin products have given a good sales. So, is this our focus products for the following quarter also?
Yeah, absolutely, yes.
And sir, who are our three major competitors?
Major competitors is all the listed you are aware of. There's, of course, Jockey is there, other brands are there. All the listed brands are there.
Sir, but in the listed, I think there are 2-3 people only, Dollar, Lux and other people. But what about this other Dixie Scott and Macho Spoto, Amul and all these people?
Of course, all these are competition. Whoever is in the market is all competition. Somewhere or in some region or in...
But these are smaller than us, these people?
These are unlisted brands, so we are unable to... we are not able to gauge what numbers they are doing.
But our major competitors are the listed one only. I think these are bigger people like Dollar and Lux.
Those numbers are visible to everybody, so we know that.
Acha, so we don't know about these other people who are not listed.
We are not sure about their numbers and all.
Sorry to interrupt, Mr. Shah. I request you to rejoin the queue.
Yeah, thank you.
Thank you, sir. The next question is from the line of Yash Sontalia from Bonnet Capital. Please go ahead.
Hi. Thank you for the opportunity. So few questions on our Pragati scheme. So are we doing this scheme only in the new states and regions or also applying to the older regions or the existing regions?
No, we have applied to a older region and to a new region, both, just to experiment how it goes.
So currently the two states what we are mentioning, both are new or the older states?
One is new, one is old.
Sorry?
One is new, one is old.
Okay, and second question, like follow up on this, in the older states, how we are dealing with our distributors? Because if I am not wrong, directly connecting or giving incentive to retailers can hamper the connection with distributors, right?
Through distributors only. The program is through distributors only. It's not a direct program. So distributor is a channel partner. Through him we are doing. It's not a direct jumping to retailers. In fact, it will help distributors also to have a better payment rotation from retailers, because that relationship will then continue with retailers. It's not one time. So the idea is to have a continued relationship between dealer and retailer.
Understood. And one more follow-up, like going ahead, if we are able to reorganize more of our distribution channel, how would it impact or apply to our inventories and margins?
That would definitely help us, and Pragati program is initiative in that line only. So that will help us to organize our distribution structure also.
Is there any ballpark quantifiable numbers on inventory and margins from this specific program?
Not as of now, but definitely it will do better. But on immediate term, it will be difficult to comment on anything specific.
Understood. And one last question, like we are expecting 15% revenue growth next year. So how much it is from the existing states and increasing volumes, and how much it is from new penetration? Any ballpark number, if we have?
Ballpark number, but of course new states the percentage will be high, and the existing state the percentage will be low, but a mix of 15% is what we are targeting at.
Understood. Thank you. Best of luck for the upcoming quarters.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Resha Mehta from Green Edge Wealth. Please go ahead.
Thank you for the follow-up. Just on a related note, from the working capital side, what the previous participant mentioned. So, effectively, what would be the reduction in working capital that we see because of this program, and also overall from, the other efforts on the inventory and, reduction of debtor days side. So currently we are at almost 63% of net sales. That's our working capital requirement. So what is our aspiration number here, and FY'25, where do we see this 63% number settling?
Going forward, we are taking necessary efforts to reduce this working capital to around 180 days for this year. We have taken a target to reduce it to total working capital to 180 days, and we are taking necessary steps. We are providing channel financing scheme to our dealers. Already 65 dealers have been enrolled in this program, and we are also preparing inventory. We have implemented S/4HANA system where we can have a real-time inventory check, what to produce, and have a business forecast for them.
All right. So got it. And also the presentation mentions that this direct distribution channel that we have, it will be for the premium and super premium product category. So is the economy range out of the direct distribution channel?
So initially we are targeting premium and the super premium range only through distribution. But the Pragati program, once we start, that will help economy range also to get into distribution model.
And what would be the revenue contribution of premium and super premium categories to FY'24 revenue?
Yearly.
Premium segment contributes around 7%.
And super premium?
Super premium is basically half percent to 1%.
Okay, got it. That's it from my side. Thank you and all the best.
Thank you, Sumit.
Thank you. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. I wanted to know your growth outlook for next 2 to 3 years.
So I think 15% year on year is what we target.
Okay, so we maintain that for
next 3 years.
Okay. And then you said if we continue to achieve that, then we can get up to 14 to 15% our historical margin.
Absolutely. Right? Absolutely.
Okay, got it. And can you just name, top 2 drivers? I understand the Pragati scheme, but besides this, if you can name top 2 drivers of our growth.
Top 2 drivers of our growth are definitely athleisure and women's wear is one. So athleisure and women's wear both are a big segment where we can have a huge growth and where our size is not quite big. So opportunity is quite big there.
Okay, got it. Thank you. Those are my questions. Thank you so much.
Thank you. That was the last question for the day. I will now like to hand the conference over to Mr. Sumit Khattan for closing remarks. Over to you, sir.
Yeah, thank you everyone for joining the call. I hope management was able to answer all the queries today. We are Orient Capital Investor Relation Advisors to Rupa and Company Limited. For any queries, please feel free to reach out to us. Thank you everyone and have a nice day.
Thank you so much.
Thank you. On behalf of Rupa and Company Limited, that concludes this conference. Thank you for joining us and you may now disconnect your lines. Thank you.